Okay, so we're getting the 30-minute zero test, and I can see that the question here is what's going to happen? 30-minute zero test, of course, I mean tension, 30-minute McClellan tension, and it just crossed over zero. We had a zero tested a few days ago. We had one this morning on the daily chart, and the bulls really picked up the last one we had. And this time the bulls, well, they did okay, not amazing. And now the 30-minute is back down to zero. So let's take a look before we get ideas about whether this is going to cause the market to do this or this. You kind of have to have an idea about what happened today. So what we want to look at is where we were yesterday into the close, and then take a look at if the bulls are participating and what type of market we have so that we can build an expectation here. And the very first thing that happened this morning, you see this? Decay flat, it pushed up, there was no red, pushed under, there's our bullish sample. We got a bullish sample right off the open. If you remember this morning, we saw yesterday some weakness in the bulls. They weren't able to generate the counterparty and trap them in and get this to move higher. They were like, that's how I felt about it. It was like, they almost-ish, sort of halfway. That's kind of how it felt yesterday. And so they showed a little bit of weakness, but we could see that they still had control of tension. Well, this morning, we were looking to see if we could get elasticity, and that would mean the bulls fail, the bears get liquidity, drive this down. Now, if you look at this, they hit right out of that, and you take a look at tension, they popped tension up. They were able to, they did not fail. This was not bulls stepping out of the way. It was the bulls hitting just like normal and driving this up. Immediately after, decay pushed positive, so we had positive energy showing up in momentum. And that positive number, a bunch of people sold. You see the red bars? So there's our bearish liquidity. And you can see they hit. And they hit here. But they're making a mistake because they went too early. They messed up. You're supposed to wait for the bulls to fail and then hit. Instead, the bulls hit and the bears hit. And the bulls had control of the market. So their hitting ended up moving back up against them. Now, at this point, I want to point something out that I was thinking was important. If I mark right here, which was yesterday's bullish position, I think the best position that the bulls had. Let's make it green. And if you remember, really quick, they were looking for bears to trap in. And right there in the low, you see we got the velocity sample of 0. There's the trapped orders, and they were able to hit. So this is the best spot. Take a look at prices today. Do you see something almost obvious now that that line is on there? There's two things. One is the obvious thing and then the less obvious. The first is this is having a hard time getting that position to make back in the green. I was anticipating more of a push-up overnight. We did get a push-up to the highs. I was anticipating through the highs. I thought that we would get through, but it just pushed up a little bit higher than this push here. You see it pushed up. It didn't push a new high. It just got really close. I was anticipating a new high. I thought that's what we wanted to see today. I thought it looked okay. The trouble with yesterday was that the bears were having a hard time being convinced to be on the wrong side of the market. That was the issue that yesterday had. So looking at today, we could see that the bears had no problem with coming in here. And we're sort of turning this position upside down, which I was anticipating would push a new high overnight. Then we see the bulls show up here. Now, the first obvious thing is that they're having a hard time getting it over that position. But the second is that it looks to me like this bullish position is they're adding to a losing position. Now, this is going to be a loose definition because it's not intraday, so there's a lot of things happen overnight. One of the things I just typically assume is that they're basically hedged. For the most part, you'll get in some options and stuff that let you not deal with risk against you. But nonetheless, this was further down. I want to point that out. I think this is going to be a thing. Okay, so moving forward, they hit. They hit there. I didn't mean to circle that. I meant to circle this. They hit the bears. They get essentially trapped, but these bears market's having a hard time turning them upside down for some reason. I think it has to do with that position yesterday. So we wait and we wait and we get another sample here right into these lows, and the bulls hit. So we have the bulls picking up 2 positions. Well, the second one they hit, but look at here, they didn't really impact tension. They weren't able to get that to curl up. So the way I'm looking at this, and this is one of those nuances that I think it's nuanced to me, but I'm hoping that this is kind of clear. You pick up the liquidity and you sort of restrain your impact for a while, or you see something coming up closer, and I think the eyes were on this. So I think what was happening was the bulls were modestly hitting, because at this moment they saw this sample, this 30-minute sample. So you could see that it's not that they stepped aside. They picked up the liquidity, but not fully. If it had been a full hit, if it had been fully, it would have impacted tension. So they did pick up the liquidity, they did hit price up, but tension didn't get impacted. And I think it was intentional. Everyone in the room during this time was looking at that 30-minute test. It was like on the horizon. It was like, oh, we're gonna test that? And I think that was going on here. So the bulls picked it up. They didn't want to step aside and say, no, bears, it's all yours, but they did want this 30-minute test. So now the 30-minute test is coming up. So let's get a little bit of a landscape here. The bulls hit. They didn't step aside. They have control. The bears, the counterparty, let's call them that. The counterparty hits unapproved. They weren't allowed to, and they did it anyway. So we have a hit, but this one's sort of unapproved. So what, an asterisk on it there? Now the bulls hit, but fail to impact tension because they saw the 30-minute tension sample here. That's what I think. We see this frequently when there's a precedent. I mean, just look at this. Is this enough of a precedent for you? Do you see that, why I call that a precedent? It's moving towards zero. When the sample happened, they were like, well, let's just go ahead and see if we can get that 30-minute sample and see if we can defend that. Stress tests are really good for trending moves. And in this sense, I'm calling a trend. It's a market where you don't do all the work. So the bulls want to buy in and then sit back. They don't want to buy in and then having to keep do all the work all the way up. A trend is where you can sit back and the market does the work for you. You don't have to. So stress tests are great for trends. They're not great for your mental health. They're not, intraday they can be messy, they can be all over the place, they can be difficult, but in terms of trends, if you want a market that can do the work for you, you have got to stress test it. So I think at this moment they're thinking, well, we had a zero test, it went pretty well. This popped back down and we're getting another zero test in the morning, which, bulls defended. They showed up. You can see that. They picked up this zero test and this one. And now we're getting another zero test. And I think the idea here is, well, can we sit back and watch this? Can we get this and defend these probabilities? So now that we've gone through what's happening, we have a little bit of a landscape. We can see that the bulls are essentially active. I think they're intending to try and mold this structure bullish. And the bears screwed up. Well, they had a hit, sure. And it brought it down, sure. But price just doesn't matter in this it just wasn't enough. It wasn't enough. You didn't do enough, bears. You didn't. And yesterday, so Wednesday, the bears had a really difficult time doing anything clear-cut or having any great control. So while the bears did hit, and I guess you could say they sort of were able to keep this position underwater, I suppose. You could look at it that way. They didn't do it right. The correct way to do it is elasticity that drives to zero, and then you pull out some news story or something, or you start to run all your orders. You get it down to zero, and then you pump it down. And this is attack time, but it showed up too early. And then that position got folded over. The bulls beat it. And now the market's back down and we're getting the 30-minute zero test, and I think the bulls are interested in the zero test. But that's the bullish perspective. So if you're looking at this from bullish perspective, you should be saying, okay, so yesterday was a little bit tough. They couldn't capture anybody on the backside. So today you should say, well, here's our guy. They're probably going to liquidate above this bar right here, not the high of yesterday. So I would assume that that would be the place where that they'd say, okay, we're out. From the bulls side, they're here and they're sort of tentatively sitting back and they're saying, all right, let's see if we can make this happen. It's game time right now. They really do need to pick this up if they're going to defend this tension. And the way that they would curl tension up, it doesn't look like they could even do today. They would need to drive this up through this position here, not this one, this one. And then as it pushes up, turning it upside down, once that position starts to realize and it goes to liquidate, this would start to curl. They'd get it back up like that. That's the game plan for the bulls. Now let's look at this for the bear. Oh wait, there's Miguel says, so bulls who tried to front run something yesterday, they failed. It blew up in their face. I think a little. I do think a little. The issue with yesterday, if you remember, was getting some bears upside down. We needed to see bears hit. And they just really didn't do a great job of that yesterday. I mean, tension. The bears just did not try. And we did have a couple of positions by the bears, and into the close yesterday, they were able to get some bears in and drive it up. But they weren't really, you could see it. They didn't really get that liquidation, I think, that they needed, that they wanted to run a trend. So I think there was some weakness on the bulls' part, not in the fact the bulls lost or anything, but because they couldn't stimulate the counterparty. You're not a hero without a villain. You're not a winner without a loser. And if you can't get the loser to play, that's as bad on you as it is on them. And I think that yesterday the bears just kind of didn't want to play. And if you remember, we were looking for a hands in the air situation, where that everybody tried to revenge trade the market in a big way. Failed. I want to see them throw their hands in the air. And I think the bears threw their hands in the air yesterday, and that was what I was looking for. So today we could see that the bulls are absolutely here and looking to defend this. I think that they are. I think the bulls are wanting to hit this, and I think they want to drive this up, and they want to get this back up, and I think this right here is the target for the bulls. Okay, so we've covered the bullish side, and to be clear, I'm bullish. I think this is, I don't think that the bears have quite got all the footing that they would need to start to topple this down. But let's take a look at the bears side anyway, so that we can understand them. So yesterday, the bears come in, and this is just to sort of motivate the psychology here. Yesterday, the bears come in, and they struggle to really do much. Or let's see here. They struggle to really do much, not much of a hit, and the market leans down, I think, just looking for a way to convince those bears to participate. They just didn't want to. And then we finally get them in here at the lows. It doesn't really work. The bears immediately get turned over. This just doesn't seem like active bears to me. This seems like there's no strong hits. There's no aggressive moves. They don't seem like they're impacting tension. They're not investing the capital to do much. They're sort of letting this wishy-washiness over them. And that's why I say that there was some weakness by the bulls yesterday. I know that sounds weird to say that the bears were wishy-washy and that's weakness for the bulls, but you gotta have a good opponent if you want to be a good trend. And they weren't getting that. So today the market gaps down, and I think this is what the bears saw. They said, oh my gosh, this position is now underwater. Let's go ahead and hit. And you could see they requested, I think, and got liquidity on the back side of that position. I think this was requested. I think they said, there's an S in there somewhere. Here's the S. They requested that because they wanted to try and drive this underwater and see if they could continue to accelerate tension. And I think it didn't work. It didn't work. They hit that, and it hardly even stressed that position out, which came right back up to their position and through, and then we've sort of been in this range stuck between these two positions. But I think overall, you can look back and you say, this is not bearish, it's bullish. Then we take a look at what the bears have done since. Nothing. So you can look at this right here. You can say, here's the high, and we get our wide because it's a multi-day, and then the short. So there's our shorter one. So we have our multi-day decay retest. And you can see right there's the second push up, and right about there we have some correlated volume about here. So you could see, I think that this is reasonable if you look at the wide short philosophy, which is the wide amount of time overnight and then a short amount of time. There being a risk reduction position here, yeah, I think you could see that. The purpose of a risk reduction is that you don't have any other options, and you clearly won in the market, and your back is against the wall. And I don't think the bears were in that situation. Velocity could have moved up and sampled. They could have got liquidity here at a much better price than they got. I think this action showed that they wanted to play, but not correctly. I think what they wanted to do was be idiots, and that's what they did. So I'm not super convinced that this is saying, oh yeah, we're amazing. This looks to me like they're a little too eager, a little too enthusiastic. They get pushed up, they throw in a risk reduction, which is too quick, it's too aggressive, and it's gonna blow up in their face. They could have waited for this if they'd have been patient. They could have got a better position there. And so I think there's likely sitting, looking at that position, there's likely stops sitting right about here based on that risk reduction, which would cause an immediate pop if it moved through there as we triggered those stops. And I think the objective of the bulls is essentially right here. They're going to want to push it right there. I think that's where the bears would say, okay, fine, we let go, we're wrong, we messed it up. And looking at this 30-minute zero test and price getting right back down to those lows right there with this position here, I think what's happening here is that they're defending this, the 30-minute tension hit zero right there. And I think they're defending it. I think they want to pick it up. And I think they sort of halfway engaged this one because of that. And now that that's here, I think we can say, I see bulls. Their intent is to try and pick this up. And I think they want to press out that, maybe the risk reduction, see if we can get up and push out these guys as we get back up. Maybe, maybe you could target just the expansion bar right there, that little sweep down. The expansion bar target, say that would be the best place to get to where you're going to push those bears out, turn tension back up, get it back over zero, and daily tension continues. And notice on this dip down here, which was very scary. Sure, it was. I mean, if you were trying to hold long, everyone got probably negative for a moment. But look at daily tension. Like, it wasn't even a zero test again. We got our 30-minute, no zero. So we got our zero here, our 30 here. Bulls are coming. I mean, I think this is the story here is pretty clear. They struggled yesterday. Today the bears decided to participate, and now the bulls are going to do what they were intending to do yesterday, which is drive them out. The targets sort of move because these guys will probably say, well, we're right until about here. And then, of course, clearly we didn't do it right. So they get pushed out, and you'd see some liquidations and stuff. But nonetheless, I think these are the guys who are going to pay. This is the position that is the root position here for this leg. And this right here is sort of the stress test here, where that we see it come down, pressure everybody. You really questioned your idea if you were holding on to this. And you see it pop back up as the bulls come in and defend this 30-minute here. So it had to do with that narrative you could pick up, and then you can piece together exactly what's going on, what these guys are doing, what they're thinking. But you have to be familiar with these events, like a 30-minute test, in order to say, well, did they fail here? And I think you could call it failure, but I don't think it was. I think they were holding off on the gas until they got the event that they wanted. And then they're going to step on the gas some more. And the whole goal here is just get it up over this position. Then we have two positions in the green. This one's in the red. And we're going to drive it up and try and push those guys out. And I think that's where we're at. I think that's what's going on here. I think that what the bears would like to do right now is they'd say, hey, we got a position here. What do you mean? This pretty much failed. This pretty much failed. So this is their root. Their starting position is there. That looks horrible, in my opinion. That's a terrible root position. You want your root position at least near the high. That's not even close. So their root position is sort of terrible. What they want to do was to push this down, and I think this was a shove in an attempt to get that under zero. And then they wanted to turn this position upside down and drive it down. And I think they were thinking if we could push that down, price could come down here. We could get this to curl down. And it would give us the best chance tomorrow. But looking at daily tension, essentially they would just get the 30-minute down to here, and daily tension would be over zero. And there's a really good chance this is just going to pop up the next day. That just from this structure. So I think a really hard shove right now could possibly push those bulls out, and it could set them up, but I don't think we've seen that from the bulls. I mean, I haven't seen anywhere the bulls explicitly say, no, they came in here, they hit. They came in here, they hit. They came in here, they hit. They hit. I haven't seen a place where the bulls say, yeah, we're going to step aside and let you have this. Not even once over the past 2 days. Nothing. They came in here, they hit. Though tension was moving against them, I think there was good reason for it. I think they were looking at what was coming. So I don't see where bulls gave up. I don't see where bulls have stumbled or failed. Simply the bulls have had a hard time convincing the counterparty to accept being the bag holder. They haven't gotten pushed out. They haven't struggled to position. They're clearly still here, hitting, playing, participating, and the bears are doing terrible, as usual. That's what they've been doing. So that's what I see going on. I think this is the objective. I think yesterday was the hands in the air moment, and that's a more meta analysis based on like the condition of the pandemic and the revenge trade. People getting blown out all of a sudden, throwing their hands in the air and saying, forget this, it's horrible, and then donating 1,000 Bitcoin to Obama and Biden and everybody because they saw it on Twitter. So I think that was why yesterday had a hard time. And that was what we were looking for. So we're getting what we're looking for. It's just tough and it takes some patience. So I think this is going to be moving up. I'm anticipating this getting through. I think this is going to be the next hard thing to get through. Then we'll see it pop through here. So you look for like a 1 to 2 point sweep. And a sweep is just where all of a sudden the number says something like 3201 and then all of a sudden it says 3204. So, like you don't see the numbers in the middle. It just pops. You say, okay, there was the sweep. That was when it hit a big chunk of stop orders. And then I think it should make its way up here. I'd love to see this into the close. I don't expect it to get up there into the close, but I'd love to see that. That'd be just make me super happy. So that's where that is. Now let's take a look at the distribution of the market right now. And you can see that, let me zoom this out a little bit so it's a little easier to see. We've just had really sort of narrow distributions. Well, let me just point out what I was looking at earlier. You see this? It opened here and moved down, and look at the amount of volume through there. So I think a lot of people are going to look at that and call it rejection. There, rejection. They're going to say, oh, got rejected. It slid without, got to a level and then slid back without volume. So it was like the prices got rejected. That's not the way I look at it. I think that it got up here and something happened in this area in the future, and the market said, oh, let's go down there. That's where the stuff's going to be. And it at this moment saw this event. It started to head in that direction. We get down there, we open up right in this area. I think that's what was going on. And if you look at this, our distribution is just like a big blob right here. We don't have a bunch of, there's no nodes in here. These are too small. I would never call those nodes. This is just, so we just have this compressed sort of small range where I think there's a bit of a battle going on. Looking at, the bulls and the bears, there's a bit of a battle going on between these two parties. And that it's compressing here because of that. We had some expansion, there's one, didn't quite get out. Here's outside, inside, retest, run, and then it just continually retested the value area on both sides, really, just back and forth. So this looks to me like a compression, because I think when we look at this chart, the bulls are buying into this, the bears messed up. So there's two sides participating, and we can see both of those sides. And mostly, I mean these two positions, right here. And they're participating in a compression sort of way, and that's resulting in this range sort of being like compressing. And that's a good thing, because compression means opinions, and opinions mean blowouts. There's money to be made. So I think that's what's happening. I think we're going to pop out this. What's going to happen, I think, is a lot of people are going to go, oh, there's the gap, oh, let's close, it is just closing the gap. But I think that's just wrong. I think this is going to move up higher, and you're going to be wrong about your reasoning. You're going to say, oh, this is the gap, and it's not the gap. It was the bulls coming in here and the bears screwing it up right here, and now they're getting turned upside down, and it's moving to wherever that they will let go. And you can like the overnight high is about where I'm thinking, right up in this area for the institutional position to blow out. Then there's another small position we could sweep through. So I think people are going to look at that as the gap. So it's just closing the gap. That's all. And I'm going to be going, nope, because you can't predict if a gap's going to close. I've never seen any even compelling evidence of a way to predict gap closures. In this instance, I think the gap closing is, it's just going to look that way, but I don't think that's what's going on. So that's where we are with this. In terms of inversions, you can see that we just pushed up here. My face. And you see we have the high there. It sort of sat around it, popped up. Again, we're getting new highs here. Perhaps we could get a more aggressive high, maybe something like, I don't know, 1,020 or something. And then it gets over top of that and then inverts. That could help get the market to move up higher, and provide us with the things that we need to grind this up to get to that spot where those bears go, oh, fine, we screwed up. Yes? Oh, good. Okay. Great.
But make sure you talk it quiet.
I'll do my best. Okay. So that's where I think we are. Hopefully the scope of this makes sense. You could see where I built the position, how I tracked the players, what I thought they were thinking, how this was playing out, looking at the 30-minute sample here, who's going to pay for that 30-minute to curl back up, where this is headed, why, I got to have all this stuff put together before I start trying to do things like place a bet. I don't bet on entries. I bet on stories. I bet on narrative. I bet on frustration. I bet on people. It's always the people, because the most impossible thing to predict are people, but the most predictable thing are people. Not because a machine is good at it, but because I'm good at it, because I'm a person. So I understand these people. I get the stories. I understand the frustration. I can understand what it feels like to try and be too enthusiastic, or to take a trade too soon or too aggressively, or to mess up or to lose. I can understand why they move their stops out of the way. I get all that stuff. So it's...
Tummy say?
I don't know. What did your tummy say?
I hear what I said.
Is it hungry? Let's go grab some yogurt. Hannah will help you. Hannah will help you get some yogurt. So I think it's really important here to say what the story is, what the fight is, what is it? Those are the consistent things that you can do every day that actually move markets. I don't... Yeah?
Can you try bringing me some yogurt?
I'm doing a video here. You want to go ask Hannah? Hannah, can you help him get some yogurt? Okay, so that's where we're at. That's where I think this is going. So what's coming up next? Let's focus on that. So I built out that narrative. We looked at that 30-minute test. I wanted to describe to you why I was bullish about it, why I thought that they would come in here. Then we looked at the bearish side to see what their story was, so we could sort of understand them and what they were doing. Now let's take a look at what's coming up next. The next event here, velocity getting to zero. We have this coming up. We have a half hour. It could happen Probably won't, but it could. So this will be one event to look at, and the next event is going to be probably tomorrow, which would be tension possibly moving back up. These are the next two things on the to-do list. I don't think there's really much else on the to-do list. I think the idea here is, can these bulls keep the bears in, keep them in the market, so that we can get these probabilities back over zero, and we're going to have one more bearish sample potentially right here where we could, maybe bears decide to come in and they're like, no way, we're going to hit this with everything we've got. Maybe they do. I think that'd be really dumb. I really do, but maybe they do. So this is going to be the next most immediate event. But the next most important event is getting this 30-minute tension back over zero. And, at this point, I think even if prices did get directional like this, like they're doing, that tension's going to probably move up maybe a little closer, probably flat. And that best case scenario, we gap up and we get tension to be up. And once tension's up, then, we're all back over zero, and this just looked like a zero test. And we just have a couple of zero tests the bulls were active about. They structured really well. I think the bulls have been doing a pretty good job. The last zero test was tough because the volatility was high, meaning when I think of volatility being high, what I mean is the distance between your entry and your stop tends to need to be much wider, and that it does a lot more of this like testing stuff. For me, that's volatility. It's not anything else. When I say high volatility, when I say volatility, I mean the ability of the market to move money from the many to the few. When I say high volatility, I mean that it stress tests your stop loss a bunch. So I think it was higher volatility on this last one, meaning that once we got our zero test, the zero test really did work out into the next day. And this was quite a big distance to deal with. And that looks like high volatility to me. It was tough. So options, a lot of people will want to trade options in those situations because it feels safer. It's not, but it feels safer. The higher volatility there. This one, pretty clean, hasn't really had a problem. This one, same thing. It got down, tested, not really having a problem. So I think the bulls have been taking the time, putting in the blood, sweat, and tears here to try and structure this market. Yesterday was sort of a flop, Wednesday, but it wasn't necessarily a loss. It was just didn't quite work. And today looks like they took the time to make things happen correctly. The bears made a mistake. So that's what I'm seeing. The bulls are doing what it takes. And that's how I think this is built right now. Miguel said bears didn't liquidate today. They doubled down, right? I'm gonna guess that you meant the bulls because it pushed down from yesterday. I think they doubled down. I think that the connection between liquidating the next day needs to be a looser connection. Take it with a bigger grain of salt because a lot of players are looking to get into a positive spread. A positive spread is where you have a strike price. Let's say this is your strike here. Let's say it's at $10 and you paid $5 for that. And let's say it's a put. And so your break even is at $5, and then you want a position anywhere less than $5. You have zero risk, it costs you $0, and you have infinite profit potential if it moves up. And if it moves down, you just have to hold until the option expires, and no problem. So you want to get into positive spreads. It means it was free, and it means you have zero risk. Free, zero risk, unlimited profit potential. Free, zero risk, unlimited profit potential. I can't think of anything better in the investment world. People love positive spreads. They love them. They just love them. So if you have an entry that gets in and it moves up, I think there's a really good potential that anyone who went long here is going to be buying or paying out, not collecting, paying. You're paying for insurance. You're going to be getting strike prices that are further away than the premium, which is totally doable. So they're going to be buying puts, and then the next day it will pressure them, but it's not actually pressuring them. They're not actually ever going to liquidate. So they're going to be paying for in the money. So it's in the money. Yeah. So that's why I think this is a little bit looser of a connection. So they can get liquidated, but you have to take that with a little grain of salt because I think a lot of people do that. Yeah. Okay. So you're looking at the wide short. This one. That took a while, but yeah. So here's a point. Here's the wide retest and the shorter amount of time retest. It's not a whole lot shorter, but yeah, and it correlates right there with this there. So, and I think that this one meets the criteria better than this one did, because if this moved down, the bulls couldn't get a liquidity sample off decay or velocity, and the 30-minute test was here. So this was absolutely no more options for the bulls. And then they got that trapped orders, they came and they hit. I didn't actually see that one. I was looking at the 30-minute, but what time, Miguel? So he's saying he thinks he's talking about the bears doubling down. I don't think the bears really had a position from yesterday. I think the bears were noodles. They just sort of, they didn't really do much. That's what I think. I didn't. They could have. We could have had some things, but they just didn't seem. Okay. So here's the bears. We cross over. Here's our bears. Here's our bears. Here's our bears. This failed. This failed. This worked. We have right here a potential decay retest. Wasn't great because it didn't really meet the criteria, but we'll give it to him anyway, because it worked and things. So here's our bears from yesterday. Those are the positions that I see. I'll circle that so they're all. Failure. They did it today. The problem with this one was that the bulls did not give them elasticity. The bulls did not move. So if this bullish position right here had failed, then this would have looked much better. But this position did not fail. The controlling party who's the bulls, did not move. They hit, they said, nope, this is ours, we still want it. And the counterparty, the bears, and I'm making that judgment based on tension, they have control of this, and they have control of this. I just erased that. The counterparty hit anyway. They came in and hit that. See that? So the bulls hit, they impacted tension. The bears hit, they impacted tension. And the bears did it wrong. They screwed up. They should not have done that. I think what the bears were looking at was that they had sort of trapped this position upside down from yesterday, thinking, oh, let's go ahead and see if we can run that out. And it didn't work. And the reason is I think they got into a positive spread. It's hard to push out a positive spread because at zero risk, it didn't cost them any money and they have infinite profit potential. How are you going to push that out? You can't. You can't get them out. You can't. So I don't think that the bears doubled down. A double down would be adding to a loser. I think what the bears did was tried to get a root position too early. They needed a root position in here, or at least in here, and they ended up with one here. It's like what? The third leg? Okay, so they finally shorted the third push. That's stupid. You should have shorted the first push, not the third push. So I think they screwed up. I think they were too eager. Just too eager. They should have waited for the velocity. You see velocity get to zero. I think that would have been a much more attractive position. This maybe could have moved higher. They could have got a little bit better spot. But instead they jumped in here off of the decay. Why'd you do that, Bears? Why? Okay, so really quick, right now we pushed through these stops here. I think that they triggered. I saw what I think was a sweep. So we've taken that out. Now all that's left is just the bulls getting those bears to liquidate. And there's 15 minutes today. And if it doesn't happen today, a gap up is what the bulls are going to need tomorrow. This is tough because moving into the close, let me explain why I say this is tough. People like to think that, let's say you buy here at A, and it moves all the way to B, and you make money. People like to say that this was one trade. We love to say that to ourselves, but it is just fundamentally wrong. It is absolutely wrong. There are moments all along the way where you have to choose to hold, add, dump, reverse. You are constantly re-executing trades along the way. If you were able to hop in here at some time, let's say you hopped in here with this low here, and it pushed up and we got our first little spot here. We hit those stops, and now you're sitting here going, oh my gosh, there's 15 minutes left in the day. We don't really have time to push up and liquidate this bearish position. We got our first target, which would be hitting those stops, and now we can look at the second target. You're in the situation where you have to choose to re-execute a trade. Do you hold? Because holding this looks like you're going to be in for an overnight trade at this point. So if you decide to do that, you have to remember you just took a new trade. This is not the same trade anymore. This essentially moved just right to our first spot, and that was great. And now you're sitting here going, oh my gosh, I'm losing, it was at 12 and it's all the way back to 8. Oh my gosh, it's down to 7, 5. You're watching the money disappear. You flip out. Oh, I don't do after the fact, Tom. I'm not actually here to describe trades to you, blah becca. My objective is to explain the narrative to you so that you can execute in your trading strategy. This is to help you know what's going on. So that it's trying to walk you through, and I'm focused on the end of the day to get everybody into that last, see what's going on into the close, do your thing. Everyone's got their own strategy. And then to get a heads up for tomorrow so that you know what's going on. I have actively chosen not to share my trading because psychology. So I actually require a bit of work because the thing that I'm asking is that you work hard, you take the time to understand what's going on in markets, and then come play along and do your thing, contribute. And I've tried to be pretty clear about what's going on, hopefully. If I'm not, that's my fault. Anyway, so right now you're in that situation, and I want to make that clear because if you think that this is just going to move straight to that next spot, you're going to be having a hard time because you're going to say, well, I thought it was just straight A to B, and it's not. It's like A to B to C to E to F, G, H. So it's H, and it's like, oh man, that was a long, and it's a long, hard road getting to the places you're trying to get because you get all these counter signals. You get new information. You have narratives to worry about. You have different things. And going into the close is hard because if you decided to hold and you say, well, I think that's the low and we're going to keep going, you're committing to holding overnight, which most likely for most of us means you're not sleeping tonight. You're going to be up watching the market, and the market's going to move around like it does. It's not going to go as fast as you want. It's going to be slow and arduous and painful a lot of times. And that's what you're committing to. If this narrative, the 30-minute sample, the daily sample, the bulls coming, if this narrative has the scope to hit that target, then you can commit to that. Or if you have a broader scope that can cover that. I impulse trade. I like to catch the first move. I like it to just get to the first place I was looking for. If it's a decent amount, which for me, decent is 10 or more points on the ES, then I take the impulse and then I just enjoy the narrative until the next opportunity comes up from conditions. For me, the extra couple of points to be up all night while this does all sorts of who knows what because it's overnight just isn't worth it. It doesn't. Well, it's just my strategy, or my not strategy. It's just my psychology. This is the way I work. I think there are some traders, like I've seen that Joe is definitely more resilient to certain things that I'm like, I don't like doing that. And so I think I represent just a different body of traders in the market than maybe somebody like Joe or some of the other traders in the room. But for me, I like the meat and potatoes impulse move after I understand the narrative. That's the thing I like. I really don't like swing trading. It's a lot of work. It's not my favorite thing to do. So that's just me. So the point I'm trying to make is that this move essentially was one trade. Choosing to hold for the next section is going to be a second trade. And that means you're going to be dealing with more information as we move forward. You're going to get things like counter signals. Counter signals are one of the hardest things to cope with, because what happens is you find a trade, you get into it, and then as your trade is working, suddenly you get some informational data point that says, dump, get out, hurry, it's over. And this is where these counter signals are dealt with using scope, essentially. It's the trust phase, where that you're trusting yourself based on the analysis, and so you're constantly referencing your past. But it's scope. Does the scope of your analysis cover the counter signals that you're getting? This is the balance that you're constantly making. And if you don't think that's true, you need more experience, because you're constantly going to be getting counter signals as trades go. You're going to see a level. You're going to see a percentage. You're going to see a signal that you often see. You're going to see something. Someone's going to post something. Someone in your favorite trading community is going to say that they're the other direction. Somebody that you respect. You're constantly going to get counter signals to your position. And I think that there's the initial move, which is one trade, and then there's the commitment to the next section, which is a second trade. I like the first. I'm happy with the first. And then I follow the narrative as it goes. That way, if the narrative decides to get more complex, would be, maybe this moves down and this all doesn't work and tension opens lower tomorrow. I got the first impulse, which I think this impulse was essentially the institutional money coming in. The second leg is built out of different stuff. So I want to make that clear, that holding for that to getting everything is usually a second trade. And you should think of it that way. Because at that moment right there, you should have said to yourself, well, do I really think this is going to go up there? Do I really believe in the analysis? Do I really think that's what's going on? Do I disagree? And so it's another trade. It's a whole new condition. It's a new set and a new mindset and new events and stuff like that. So I just want to say that's how I deal with these. First, I grab the first leg. If it's good enough, I'm done. I'm happy. And then I track the narrative as it goes forward. I'm not the biggest fan of swing trading because it just doesn't suit me. There are traders who are better at that, and that's why they're here. I like diversity in terms of people with different opinions that are not stupid. And by stupid, I mean there's no research, you don't actually believe it. I don't think that's diversity. I think that's just noise. I think there are genuinely other people, the sound of my voice in the room, who genuinely have differing opinions that are good, that are not the same. That for me is diversity, and that's beneficial to me to hear. I sit and read your guys' comments in the Discord, and I pay attention to what's going on there and stuff, and I try to metabolize different opinions. I think it's important. So that's where we are. I think going into tomorrow, the big thing is getting this back up over zero. I mean, if we move up overnight and we're able to open a little higher, and looking at this, we could keep this expansion kind of going. What's going to happen is we're going to need to continue to find more and more volume as this goes up. So it's going to have to look like this. We need to see prices rising and finding just a bunch of volume as it goes up. It obviously won't look like that because mine's going to reset right here. But so I guess the distribution would have to look something like this. as it moved up, finding more and more and more volume. And probably a second one here would be the spot where that it's like, there's the liquidation. And that would be where that I would consider it liquidated. This is what I would like to see in terms of distribution. Something that looks like this, a bimodal, I think would be great. And that would tell me the market is moving up, finding the volume, pressuring out those bears. I'm happy. That's what I'd be looking from there. And, just looking at like the dollar and stuff, you can see like debt just not what I would expect. I think with the things that have been going on and things like that this has been pretty quiet. We've seen some little pops down, a couple little moves here and there to have played in, but not much. And this to me looks like the dollar is pretty slow. I don't see anything aggressive there. Just not much going on in terms of like the currency backing the equity market. So I think still kind of slow here. Bulls have established themselves. Tomorrow morning, what I really would like to see is right off the open for something like decay to pop up. We see the bears pop in there and, just totally nothing. And then the bulls just drive it. I would be totally fine with no bullish sample in the morning. Just nothing. No sample. Just the bears try to fill something. It fails. It turns upside down. Heads up. We see it accelerate and then sort of slow off into the day. Maybe prices look, something like this. And then we sort of get the normal pricing sort of things. But, right in the morning, we see those bears. I'd love to see that. I think that would suit this market really well. It would rectify the difficulties we had back on Wednesday. This is kind of the thing that I'm looking for tomorrow morning. That's what I anticipate. If the bears get some sort of home run overnight, we have to think about this. So if the market comes down, tension moves under, the very next thing that you should immediately put your eyes on is the daily tension, because it'll have to hit zero. We'll have zero here, a zero test here, and a zero test. That'll be the next thing. So if this pops down, that's the thing you're going to be dealing with. We're going to be dealing with another daily zero test. And I think it would be kind of a pain if prices came down and we got a zero test at a lower price than the previous one. I think this would be something to pay attention to. So just to be clear, this, you have to know about it. So when it happens, that zero test would be the next thing that you want to immediately look at. We'd want to see the bulls pick it up. They need to hit liquidity. They need to get those trapped orders. That liquidity is going to have to work. It's going to have to look like this. That's what we would need tomorrow. I think if we got a zero test tomorrow morning, it would be a bigger deal than the last ones. So I would be hyper focused on that. I'd be like, oh, there's the zero test, and I'd start looking at that from that perspective. And I think the bears would get highly motivated at that moment too. I think they would call up the news stations and be like, let's grand slam the crap out of this if we can. It would be lucky if they did. I don't think they're going to, because I can see they're stuck. And I can see that they really didn't turn over any bullish positions. They just failed to accomplish anything. So I still think this is headed up to this area. But I want to cover all those bases so that you can see that possibility space in front of you so you can react more quickly, knowing what's coming. For me, the thing my eyes are set on is getting 30-minute over zero and then see if we can pump tomorrow. See, is Wednesday into the close, we were at like 65%, I think. It's about 65%. And it was like, ooh, pumping the market higher the next day is going to be tough. So we burned that off, and now we're back to that position where we get a little bit better prices through here, about the low of the previous day. And we have room to run this up the next day. This is a much better position to be in than we were on Wednesday for the bulls. So yeah, that's about it. I mean, there's not a whole lot that I think is going to happen between now and then. Oh, we might. No. Nah, I doubt that happens. So we're getting close here. But I don't think we're going to get a bearish sample into the close. The advanced decline have to be positive. I don't think it's going to happen. Alex asks, are you surprised that we have neither bullish sample nor bearish sample today? I'm not sure what market you're looking at, Alex. Actually, I see both. Actually, so quickly, decay dipped under. There's the trapped orders. The bulls hit right there. Decay pushed positive. There's the trapped orders. See the bars are red. They hit. They impact attention. We have bulls and bears. Then further, the bulls hit here, but waited until 30-minute tension got to 0 and then hit. We have, in my opinion, 3 positions plus a multi-day wide short decay retest, which was pointed out by Miguel. I think it was a good catch here. So there's the wide sample and there's the shorter sample. There's the trapped orders. So I see 4 positions by the bulls. I see 1 position by the bears, and the bears position, well, 2 positions by the bears. We had the wide short, there's the wide, there's the short, there's the trapped orders on the second pop. They hit it, so that one worked, but the bulls did it out of structure. So I don't know what market you're talking about. I see them, heat wave, this is all I do. Never heard that one. So this is where we are. Pop. I see bulls and bears. That's what I see. So I'm not sure what you mean. Yeah, so that's where we are. Hopefully I was able to get through all the narrative, what was going on through the day, and enough time to help everyone see that this 30-minute sample was good enough. I think I got through in a couple minutes. Otherwise, I hope that a lot of you actually saw that and didn't need my narrative, that you're able to pick up on the bulls hitting, the bears hitting, the bulls seeing that 30-minute 0 test and all those things going on. Hopefully you guys were able to see that, because I think if you really trust that you can do this and you take the analysis serious, that you will be able to say, oh, okay, I get what's going on here, and that it'll make sense. Instead of being an entry, you just go, oh, this makes sense, and you get it. That would make me just happy, because I think that would make the most useful. Oh, yesterday. Yeah, yesterday the Bears just had a hard time. And I think the Bulls wanted to turn them upside down and empty their pockets, and the Bears just didn't want to play. And I sort of explained why. I think it was hands in the air after a longer term revenge trade. They were like, bah! That's what happened. And I think that totally understandable. I know a lot of people are trying to short the market because they hear the news and they have ideas about what a market is, and they're just wrong. I think they're just wrong, to be honest. So I think this was a pretty good trading day. I think it was a little bit tougher because you kind of had to understand what was going on the previous day. And then I think the hard part may have been, I'm going to guess, is, well, if the bears hit, what does that mean? And I think this could be a little bit more difficult, because you have to understand what elasticity is in order to understand why that bearish trade was bad. If you just looked at the hit and you said, but it was a successful hit, you might have said to yourself, well, we have bears and this kind of thing. But if you were sitting here going, no, the market's looking at elasticity, you'd say, ooh, you guys did that wrong. And so I think that was a little bit more difficult to interpret there, because you had to have that premise of saying, this is looking to develop elasticity, and it's not. And the bears try to play it like it's elasticity, and it blows up in their face, and that's typical bear behavior. Burger. Oh, look at this. We got a sweep right here after the close down. So we're at 04. This is about like a couple point sweep down. Okay, so the way that I'm looking at that pop down, really it hasn't pressured the main root positions. But what I'm thinking is because of the tentativeness of this position, if the bears decided, or if they had some sort of ace in the hole, and they were able to get this to open down here and get daily under, 30 under, yeah, almost there, then I think tomorrow the Bears could have a chance to pick this up. But what's important about that is that they're going to be doing it in the face of the controlling party, which means it's going to be aggressive. They're going to need to really go for it. Otherwise, I don't think it's going to hold together. So I'm looking at this sweep down thinking, that was pretty aggressive. And you didn't even pressure the position. That's an expensive move to not even have advanced the bearish case, which is pushing out through the lows. This was an expensive sweep. Whatever caused it, it would have been better to have started the sweep here and actually caused that sweep there instead of starting it here and ending it here and saying, oh my goodness, so that looks like an expensive move that didn't get through the lows, didn't turn that bullish position upside down. But this is going to be interesting. Well, if I see anything develop, I'll try to post about it. But I think today was pretty good stuff. I think that the narrative was pretty good. I think if you go back over the video, look at the events, try and understand what happened so that you can see the story for yourself, so that you can say, oh, I see why that was motivated there. So Netflix, what did Netflix fall apart? But isn't it just, aren't all of Netflix earnings just over in Disney Plus? Let's take a look. I have Netflix on here. So we're at in the 467. Ooh, that's here. You can see we had this the pop out the top, sort of channel concept. Probably right about here, just above 450. So yeah, if I know price action analysis, I shouldn't do that, but just to get an idea of where things are at and how people are feeling about it, I could see Netflix. Okay, so that's it for today. If you guys have questions, ideas, sorry, just watching Joe implode for a minute here about some puts or something. Okay, I'll see you guys tomorrow.